So in this video, I'm going to talk about why you should keep living in Toronto and rent there. But if you're buying, definitely avoid Toronto if you want to get into real estate investing. And I'm going to tell you exactly what I did because I was in a similar situation. So you can kind of follow that and then hopefully you'll get some value out of it. We're seeing properties where the rents can't even cover the high expenses, right? So most Toronto condos right now, if they were bought in the last couple of years at today's rates, are negative $1,000 cash flow. Doesn't matter if you're making 100,000, right? That's a lot of money to shell out of your pocket just to hold a property. So this fundamental reason is why you need to be really careful with investing if you're in the Greater Toronto area, because there's so much attraction to Toronto. And mind you, it's an amazing city. There's a reason why everyone's investing there. It's known as a world-class city, but the issue is that it just doesn't make sense from an investment perspective if you're a newer investor or you're buying smaller properties, right? So personally, like, I see a lot of these deals come up and they're marketed really well, but you got to be careful because the cost to buy a property in some areas right outside of Toronto where you can get similar rents versus Toronto, there's almost like a 50% difference. So you have a lot of better options that you can actually take advantage of if you're looking to get into the market. And a lot of those options are a lot more affordable. And here's the thing, not only does that help you buy your first property, but that's gonna be the same thing. That's gonna let you buy multiple properties down the line. I'm gonna tell you how. So for me personally, like, I was living in the Greater Toronto area and I was looking at the prices. I looked at the rents versus the expenses. So this was a little bit before COVID, and then COVID hit as well, and everyone was like scared. They're like, just kind of like right now, the market's gonna crash. Everything was crazy. But even back then, I looked at the rents versus the prices of the properties, which were a lot lower back then everywhere, including Toronto and the Greater Toronto area, like areas like Mississauga, Brampton. And it just didn't make sense. The numbers were like almost always, if you bought a property where you can add a second unit or that was like a legal duplex where they had like an upper unit and a basement that you could rent out separately, you were still paying out of pocket. And like I said earlier, like, we were looking in Hamilton and we see property prices like 40% less, 50% less. So you could see like semi-detached houses in Mississauga that were the same price as a legal duplex in an A area of Hamilton. So it was a no-brainer for me. So as soon as I figured that out, I bought a property that was actually even a lot cheaper than that because it was a single family home and I added a second unit. So that's the house I'm sitting in right now. So this is the upper unit. But obviously I don't need to live here, right? So at that time I was still living in the GTA because that's way too much space for me. So I was living in a condo. So I could rent that condo for a lot cheaper even back then than it cost me to buy it, pay for the maintenance fees, property taxes. So I did that, and then I owned a property that had 2 units that I could rent out that was producing more income than $1 million property in the GTA. So the great part about it is I was able to take advantage of the rising market. So as the market was going up, and like I told you, I added a second unit to the property, I was able to refinance that property. And because the value was still reasonable where I could get financing, because remember, once you go over a certain amount of a mortgage, you can't qualify anymore. So having cheaper properties that are creating more income, you're more likely to get approvals from the bank to buy more properties. So I was able to buy the next property, and then I bought another property. So just doing that, I was able to buy 3 properties in a little over a year. Not saying that everyone should do that. I was just like really committed to it. It was part of my goals, and I'm not gonna lie, it is a lot harder right now. It was easier, rates were cheaper, it was easier to qualify, but also I bought solid properties where I didn't overpay. And I can guarantee you, if I tried to do the same thing in the GTA, it wouldn't have worked. Like, I wouldn't have been able to actually even buy one property, right? And I'm sure like the values have risen everywhere, including the GTA, but it just fundamentally doesn't make sense because if you look now, a lot of these same properties that I'm telling you about, even if we're not cash flowing, we're close to break even. In Toronto, if I bought a property and I had a renewal coming up where I had to get a mortgage at today's rates, I'd be negative like at least $1,000. So that's why you're seeing there's an influx of condos right now for sale in Toronto. So the easiest strategy right now, literally you can do the same thing that I did. And I actually still do this even though I'm in the Hamilton area right now. I'm renting a condo that's costing me $700 less to rent than it's costing the owner to own. So their mortgage, property taxes, everything adds up to a much higher amount than what I pay to rent it. I just need that much space, right, for myself and for my wife, so we're good. Like, we don't need more than that, so why would we get a bigger place? Now, if your situation is different, obviously you might need a bigger place, but I can guarantee you, if you look at what it costs to rent a unit versus own, it's almost always cheaper to rent right now in pretty much every case, especially in the Greater Toronto area. So you can do that and then use your buying power somewhere else where it's cheaper, where you can actually get a much better bang for your buck, and you can actually have the ability to scale that up because the banks are more likely to approve you if you're getting a property that's cheaper but producing more income, right? That's the golden rule. And this doesn't have to be something you do like right away. I'm not telling you to like try to buy like 5 properties in a year or something, but just buying your first property this way, it'll help you get to the next step a lot easier. And it's a lot easier than you think, right? Because if you come to Hamilton, for example, where I'm, it's just down the QEW, 45 minutes away from most areas, an hour in some cases, but it's very easy to understand this market as well. Now, mind you, I did connect with a lot of professionals here, and I'm also a real estate agent now, which is why I'm here, because I work mostly with investors that are looking to do the same thing. So I was able to take advantage of the relationships I built as I was learning about the market and doing all this stuff. But you can definitely find a lot of free resources. So I actually have a couple of free guides. So I'm going to attach the free Hamilton investment guide down below. And if you're looking at buying a property in these areas, or even if you want to actually move, but you want to make kind of a sound decision where it makes sense financially, right? Feel free to reach out. Like, I've lived in the GTA as well, so I kind of understand exactly what's going through your mind, most likely. And I can tell you a little bit about this market and how it relates to the Greater Toronto area and how you can take advantage of it even in this market.